Is your credit score holding you back from your dream car, your dream home, or even your dream life? Don't worry, you're not alone, and better yet, I've got your back. Today, we're diving into simple, practical steps to repair your credit score and unlock financial freedom. Hi, I'm Farouk, and hopefully soon to be Dr. Farouk. I've built businesses from the ground up, navigated the challenging world of real estate, investing, and spent years learning the ins and outs of financial success. But let me tell you something, it wasn't always smooth sailing. I started from humble beginnings as a first-generation immigrant with no financial safety net, no credit history, and plenty of obstacles. I've experienced firsthand how bad credit can feel like a ball and chain, keeping you from achieving your dreams and even making everyday life an absolute struggle. Imagine being denied a loan for your first car, missing out on the house you've always wanted, or even being rejected for a rental application. It's frustrating, demoralizing, and quite frankly can be very overwhelming. But here's the truth that I wish someone had told me back then. Fixing your credit isn't impossible whatsoever. It's not some mystical process reserved for financial experts or the super wealthy. Anyone, yes, and I mean anyone, can turn their credit score around with the right knowledge and tools. And today, I'm here to share exactly how to do that. Whether you're at rock bottom with a score in the 400s or just trying to edge your way from good to excellent. The steps all outlined today are proven, practical, and most importantly, they're achievable. So grab a notebook, stay tuned, and let's break it all down step by step, because once you understand how your credit score works, you'll be empowered to not only fix it, but also use it as a powerful tool to unlock the life you've always dreamed of. All I ask in return is you let your friends know, let your family know, and you continue to push this education to others. Your credit score is like your financial GPA. It's a snapshot that tells lenders how responsible you are with money. Nobody likes to give money to someone that's not going to return it, and that's the whole point of your credit score. Whether you're applying for a credit card, a mortgage, or even renting an apartment, your credit score plays a massive role in how much trust financial institutions place in you. But to fix or improve your score, you first need to understand what's actually behind that magic number. It's made up of 5 key factors, each impacting your score in a very different way. Let's break them down one by one. Number 1 is payment history, which accounts for about 35% of your credit score. This is the heavyweight of your credit score. It's the single most important factor, accounting for 35% of the total. Lenders want to see that you pay your bills on time because it indicates reliability. Missing just one payment can stay on your credit report for 7 years and can cause a significant drop in your score. That's why consistency is key no matter what you do in life, and your credit score is no different. So a tip for you is to set up automatic payments or reminders to make sure you never miss a due date. Even if you can only make the minimum payment, staying consistent protects your score. Number 2 is credit utilization, which accounts for 30%. The second biggest factor is how much of your available credit you're actually using, known as credit utilization. This is calculated by dividing your total credit card balances by your total limits. Ideally, you just want to stay and keep this number below 30%, but if you really want to optimize your score, aim for under 10%. So let's say you have a total credit limit of $10,000 and a balance of $3,000, your utilization would be 30%. But if you can bring that balance down to $900, your utilization drops to 9%, which can significantly boost your score. Credit history length accounts for 15%. That's number 3. This factor looks at the age of your credit accounts. The longer your accounts have been active, the better it is for your score. It shows lenders that you have a stable financial track record. You get paid and you pay. Even if you paid off an old credit card, keep it open if it has no annual fee. Closing it could actually shorten your credit history and hurt your score. So the longer you keep these cards, the better. And then credit mix, which accounts for 10%. Lenders like to see that you can handle a variety of credit types. It includes revolving credit like credit cards and installment credit like personal loans, auto loans, or a mortgage. Having a healthy mix demonstrates that you're financially versatile and can manage different forms of debt responsibly. Now, don't take on unnecessary loans just to diversify your credit mix. Focus on what you need actually. And then number 5 is new credit inquiries, which accounts for 10%. Every time you apply for a credit, lenders perform a hard inquiry on your credit report, which can temporarily lower your score. This is why applying to multiple credit cards or loans in a short time can raise red flags for lenders. So the advice would be to space out out credit applications, and only apply for new accounts when you absolutely need it. By understanding these 5 factors, you're not just learning how your score is calculated, you're equipped yourself with the knowledge to create a solid plan for improvement. Now remember, every small step you take, whether it's paying down debt or avoiding unnecessary inquiries, adds up over time, and it helps you move closer to your financial goals and moves the needle. Now that we've demystified your credit score, let's dive into some actionable steps to start repairing and improving it. First, you need to check your credit report. When it comes to fixing your credit score, the first step is simple. You need to know what you're working with. You wouldn't start repairing a car without first diagnosing what's wrong, right? The same principle applies here. Your credit score is your diagnostic tool. It tells you exactly where you stand and what might be dragging your score down. The good news is checking your credit report is free and easy. So how do you access it? So one of the tools you can use is annualcreditreport.com. This is the official website authorized by the federal law to provide you with 1 free credit report per year from each of the 3 major credit bureaus: Experian, TransUnion, and Equifax. And here's a pro tip. Instead of pulling all 3 reports at once, stagger them throughout the year. So maybe check Experian now, TransUnion in 4 months, and Equifax in another 4. This way you can monitor your credit more frequently without any additional cost all year long. So what to look for? Once you've got your credit report in hand, it's time to roll up your sleeves and dig in. Look carefully at every account listed. You're hunting for inaccuracies or red flags that could be unfairly hurting your score. Here are the most common issues to watch out for. Missed payments that you might have actually made. Sometimes payments don't get reported correctly. If you spot this, it's critical to dispute it. Accounts you don't recognize. These could be signs of identity theft or errors where someone else's accounts were mistakenly linked to your report. And then there's also incorrect balances. Make sure the balances listed match your record. Overstated balances can negatively impact your own credit utilization, and you did nothing wrong. Also, closed accounts reported as open. This can confuse lenders and skew your credit mix. Also, duplicate accounts. Sometimes the same account appears twice, making it look like you have more debt than you actually do. These errors are more common than you'd actually think, and they can have a significant impact on your score. So how do you even dispute errors? If you find an error, just don't panic. Disputing it is very straightforward, and all 3 bureaus allow you to file disputes online. Makes it a lot easier, by mail or over the phone. But let's be honest, who's trying to get on the phone nowadays? Here's a quick guide though. First, make sure you gather your evidence. Locate any supporting documents, such as payment confirmations or bank statements, that proves your case. Submit your dispute. Go to the bureau's website, Experian, TransUnion, or Equifax, and follow their instructions for filing a dispute. Attach the evidence, explain the issue clearly, and then follow up. Bureaus are required by law to investigate disputes within 30 days, so check back to ensure the issue is resolved and monitor your report for updates. Fixing even 1 error can lead to an immediate boost in your credit score, sometimes within weeks. It's one of the fastest ways to start seeing results on your credit journey. Now that you've cleaned up any inaccuracies, you have a clear picture of what's holding your credit back. In the next step, we'll tackle your credit utilization, which is another major factor in boosting your score even more. So now let's focus on step 2, which is paying down those balances. Now that you've reviewed your credit report, it's time you tackle one of the most significant factors in your credit score, and that's going to be credit utilization. This just simply means how much of your available credit you're using at any given time. It's the second most important piece of your score, accounting for 30%, and improving it can lead to noticeable results fairly quickly. So what is credit utilization? Think of credit utilization like a thermostat. When it's too high, your score feels the heat. Lenders see high utilization as a red flag because it can signal that you're relying too much on credit and might struggle to repay. Ideally, you want to keep this number below 30%, but if you're aiming for the best results, shoot for that under 10%. The lower the utilization, the more confident lenders will be in your financial stability. For example, if you have a $10,000 credit limit and your balance is $3,000, your utilization rate is 30%, remember? But if you can bring that balance down to $900, your utilization rate drops to 9%, which is much better for your score, and it helps you in the long run. So strategies to pay down some of these balances. Paying down credit card balances may sound simple in theory, but it requires a clear plan to execute effectively. So here's how you can approach it. Start with a high interest debt. Credit cards often have the highest interest rates, so start by tackling the balances that cost you the most over time. This strategy, known as the avalanche method, saves you money and helps you pay off debt even faster. faster. So consider the snowball method. If you need quick motivation, start by paying off the smallest balances first, regardless of the interest rate. This builds momentum as you see accounts paid off one by one. It just feels better. Consolidate debt if necessary. If you're juggling multiple cards with high interest rates, consider a balance transfer card with 0% interest for whatever introductory period they give you, or a personal loan with a lower interest rate. This can simplify your payments and reduce your overall costs. Use windfalls wisely. Did you get a tax refund, a bonus, or unexpected income? Did you find $100 on the floor? Allocate a portion of your credit balances. These lump sum payments can quickly lower your utilization rate. Here's a tip for managing utilization on a budget. If money is tight, don't worry. There are still ways to improve your credit utilization without feeling overwhelmed. Make multiple payments each month. Even if you can't pay off the entire balance, making small payments throughout the month keeps your reported balance even lower. Most credit card companies report balances at the end of your billing cycle, so paying early and often can actually help you. You could also just request a credit limit increase. If you have a solid payment history, ask your credit card issuer for a credit limit increase. For instance, if your limit is $5,000 and your balance is $2,000, your utilization is 40%. If your limit increases to $10,000, your utilization drops to 20% without paying a cent. So just don't use the higher limit as an excuse to spend more. Still be frugal with your limit. So improving your utilization isn't just about paying down balances. It's about creating habits that's going to keep it low in the long term. This means avoiding any kind of unnecessary charges and being mindful of how much credit you're really using at any given time. With a clear plan to reduce your balances and maintain healthy utilization, you're already taking a huge step forward towards boosting your credit score. And next, let's focus on another critical piece of the puzzle, which is staying consistent with those on-time payments. So making on-time payments is a non-negotiable by every stretch of the imagination. When it comes to fixing or maintaining your credit score, payment history reigns supreme. It's the most influential factor in your credit score, accounting for a massive 35%. That's why making on-time payments isn't just important, it's absolutely non-negotiable. Late payments, even by just a few days, can stay on your credit report for up to 7 years, and the impact can be severe. Why on-time payments even matter? Lenders see your payment history as a direct reflection of your reliability. Are you someone who pays on time every time, or are you someone they'll have to chase down for what they're owed? Consistency in payments doesn't just build trust, it also saves you from unnecessary fees, interest rate hikes, and long-term credit damage. The harsh truth is that even one late payment can cause your score to drop significantly, especially if you have a high score to begin with. For example, a 30-day late payment can drop your score by as much as 90 to 110 points. That's why it's critical to make on-time payments your top financial priority. So how do you ensure you never miss a payment? Let's face it. Life is busy and sometimes bills can slip through the cracks. But with a few simple strategies, you can set yourself up for success and avoid late payments entirely. Just set up automatic payments. Most banks and credit card companies allow you to set up automatic payments, so why don't you just do it? You can choose to pay the full balance, the minimum payment, or even a fixed amount every single month, and it ensures that your payment is made on time even if you forget. Use calendar reminders. If you're not comfortable with automatic payments because you don't know what's going to be in your bank account, set up reminders on your phone or email. A notification 2 or 3 days before your due date gives you enough time to take action. Align payment due dates as well. If you have multiple accounts, request to have all your due dates fall on the same day or a specific time of the month that makes more sense for you. This makes it easier to remember and manage payments. Always keep a buffer fund as well. Having an emergency fund can help you avoid late payments altogether during tight financial months, which we all incur. Even if you can only afford the minimum payment, it is far better than missing the deadline entirely. What to do if you've already missed a payment? Missed a payment, just don't panic. There are steps you can take to minimize the damage and possibly undo that impact as well. What you can do is you can call your creditor immediately. If you've been a good customer with a history of on-time payments, many creditors are willing to remove a late mark as a one-time courtesy. Be polite, explain the situation, and ask for some leniency. It goes a long way. It doesn't hurt to try, and then make the payment ASAP. The faster you pay after the due date, the less impact it will have. Payments that are less than 30 days late often aren't reported to credit bureaus at all. So basically just act quickly. Write a goodwill letter. If your request over the phone doesn't work, try writing a goodwill letter to your creditor, and this is a formal request asking them to remove the late payment from your credit report, especially if you've been a responsible borrower overall. Remember to focus on the future. One missed payment doesn't define your credit journey at all. Continue to make consistent on-time payments going forward, and the negative impact will lessen over time. On-time payments are the backbone of a strong credit score. It's not about perfection, it's about consistency. With these strategies in place, you'll build a very solid foundation for long-term financial success. So next, let's explore how do we avoid some of those common pitfalls like opening too many accounts at once, and how to build some positive credit habits for the future. So avoid new credit applications for now. When you're working to fix your credit score, one of the easiest traps to fall into is applying for new credit. It might seem like opening a new credit card or taking out a small loan could help boost your score, but in reality, it can often do more harm than good, at least in the short term. Let's talk about why holding off on new credit card applications is a smart move while you're repairing your credit. So how hard inquiries affect your credit score. Every time you apply for credit, whether it's a new credit card, an auto loan, or even store financing programs like Macy's cards or Sephora card, it triggers a hard inquiry on your credit report. This means that lenders actually pull your credit file to evaluate your credit worthiness. They check everything we've been talking about. While a single inquiry might not drop your score by a few points, multiple inquiries in a short period of time can add up very quickly, making you look very risky to potential lenders. They think you're really on the hunt for a lot of credit. I think some key points to remember really is that it can affect your credit score usually during the first 12 months. Multiple hard inquiries in a short time frame signal to lenders that you just may be struggling financially, and it just lowers your credit worthiness overall. So why avoiding new applications matters during repairs. While you're focused on improving your credit, every point counts. Applying for new credit unnecessarily can actually derail the entire progress that you're making by temporarily lowering your credit score. Also, it could just raise a red flag to lenders, making it harder to get approved for credit when you actually even need it later on. If you're in the middle of repairing your credit, the best strategy is to hold off on any new applications unless it is absolutely essential. This gives your score time to recover, stabilize, and as you implement the other steps in this plan, it's going to really be beneficial. When applying for credit might be actually necessary. Of course, there are situations where applying for new credit is unavoidable, or even it's beneficial. Here are a few exceptions to consider. So secured credit cards. If you're building or rebuilding credit and don't have any active accounts at all, a secured credit card can help establish positive payment history. Just make sure to choose one with no hard inquiry or minimal impact on your score. Refinance some high interest debt. If you can, consolidate or refinance debt at a lower interest rate. The long-term savings might outweigh the short-term impact of a hard inquiry. Also, urgent financial needs. Sometimes life just happens and you might need a loan or credit card for an emergency. These cases, just apply responsibly and avoid multiple applications. So tips to minimize the impact of those hard inquiries. If you must apply for a new credit, here's how to do it strategically. Do your research first. Before applying, make sure you compare multiple lenders and credit options to find the best fit for you. Avoid multiple applications by knowing exactly which product you want first instead of just applying willy-nilly. Keep applications within a short time frame. When shopping for loans like a mortgage or a car loan, credit scoring models often treat multiple inquiries within 14 to 45-day period as a single inquiry. This is called the rate shopping, and it minimizes the impact on your score. Ask about pre-qualification. Many lenders offer pre-qualification tools that use a soft inquiry instead of a hard one, allowing you to check your chances of approval without affecting your score at all. Remember, the goal here is to focus on repairing and stabilizing your credit by avoiding new credit applications for now. You're giving yourself the best chance to rebuild your score without unnecessary setbacks. Patience truly does pay off, and the progress you're making today will open doors to better credit opportunities down the road. So in the next step, we'll look at how to build positive credit history and use the accounts you already have to your advantage. So let's build some positive credit history. Fixing your credit isn't just about addressing past mistakes. It's about building a strong foundation for the future. A critical part of this process is establishing and maintaining positive credit history. If you're starting fresh or you're struggling to get approved for traditional credit cards or credit products, don't worry. There's smart alternatives designed specifically for people in your situation, and let's explore how to use these tools effectively to rebuild your credit and pave the way for financial success. Why positive credit history matters. Your credit history is like a financial reputation. Lenders want to see that you can responsibly manage credit over time. The longer and stronger your history of on-time payments and low credit utilization, the better your score will be. Building positive credit history isn't an overnight process, but with the right strategies, you'll see steady progress. Options to build positive credit history. If traditional credit cards or loans aren't an option, like we were just discussing, here are two excellent alternatives to consider. We already went over the secured credit cards, but it's a stark reminder that we need to remember that that is an option for us. It's the most accessible way to build or rebuild credit. And here's how it works. You put down a refundable deposit, typically equal to the credit limit that you're going to get, and then you use the card like any other credit card. Because the issuer holds your deposit as collateral. They have no risk. Secured cards are much easier to get approved for, even with poor credit. Your whole credit score is about trust. And tips for using secured credit cards. Treat it like a regular credit card. By making small purchases each month, pay off the full balance on time every month to avoid interest charges, and build a track record of on-time payments. Look for secured cards that report to all three major credit bureaus. This ensures that your positive activity helps improve your credit score through all three bureaus. Also, credit builder loans. That's the second one. Credit builder loans are specifically designed to help people improve their credit scores. They work a little differently than traditional loans. Instead of receiving the money up front, your payments are deposited into a savings account. Once you paid off the loan, you get access to the saved money. Plus, you've built a positive payment history in the process. Why credit builder loans work. They create a record of consistent on-time payments, which is a major factor in your credit score. You build savings while improving your credit, creating a financial safety net. Helps so many categories. And where do you find them? Local credit unions and community banks often offer credit builder loans. Online platforms like Self or SeedFi specialize in these kind of products. So it's some tips for success with alternative credit tools. No matter which tool you choose, the key to success is responsible usage. Here are a few guidelines to maximize those benefits. Make payments on time every single time. On-time payments are non-negotiable. Late payments can quickly undo your progress, so set reminders or automate all the payments so you stay consistent. Keep your balances low. If you're using a secured card, aim for less than 30% and ideally remember less than 10%. This keeps your credit utilization very low and it works in your favor. Make sure you continue to monitor your progress. Check your credit report and score regularly to track those improvements. Celebrate the small wins and adjust your strategy as you need. And then eventually you can graduate to the traditional credit products. Once you've built a solid track record with secured cards or credit builder loans, you're likely qualify for regular credit cards or loans with better terms. This is a sign that your credit score is moving in the right direction. Building positive credit history takes time and patience, but the effort is well worth it. These tools not only help you repair your credit, they lay the groundwork for financial freedom by showing these lenders that you're responsible and you're consistent. You'll open doors to better opportunities, from lower interest rates to larger credit limits. And let's just go ahead and wrap up with some quick tips and strategies to accelerate that progress, and let's keep your credit score on the rise. Some bonus tips for rapid improvement. If you've been following this step so far, you're already on your way to a healthier credit score, but what if you need faster results? Whether you're gearing up to qualify for a loan, improve your job prospects, or just want to see quicker progress, these bonus tips will help you accelerate the process. They're simple, they're practical, and when used correctly, can make a big difference in a short amount of time. Number one is become an authorized user. One of the quickest ways to give your credit score a boost is to piggyback on someone else's positive credit history. So here's how it works. If a trusted family member or a close friend with excellent credit adds you as an authorized user on their credit card, their positive account history gets added to your credit report. This can increase your score almost immediately, especially if the account has a long history and low utilization. So some key things to consider is to ensure that that primary cardholder has a strong credit history. Note late payments and low balances. Make sure they have low balances. Their behavior will directly affect your score. So you don't want them to be in the same position you are if you have bad credit. You don't have to use the card or even have access to it. They can just add you to the account and throw the card away or hide it in their closet or wherever. Simply being added as an authorized user is enough to reap the benefits. Discuss the arrangement openly and set clear boundaries to avoid any potential misunderstandings. Don't start running up someone else's credit. Also, request a credit line increase. Another quick win for lowering your credit utilization is to ask your credit card issuer for a credit limit increase. For example, if your credit limit is $5,000 $1,000 and you're using $2,000, your utilization is at 40%. But if you increase it to $10,000 again, remember, your utilization drops to 20% instantly without paying down any debt. So how do you request it? Call your credit card issuer or request the increase through their online portal or their app. Highlight your positive payment history and any improvements in your income or your financial stability. Avoid making the request if your credit score has recently dropped or if you missed a payment. Just bad timing, as this could lead to denial or worse, a lower limit. Don't use the extra credit as an excuse to spend more. Remember, the goal is to reduce the utilization, not rack up more debt. That's not why we're doing this. Remember, you can negotiate with your creditors. If you're struggling with unpaid debts, don't ignore them. Reach out to your creditors and negotiate. Many lenders are actually willing to work with you, whether it's through a payment plan, a reduced settlement, or even removing negative marks on your credit report. Some steps to negotiate effectively. Be prepared. Gather all your necessary details about your account, including the outstanding balance, interest rates, and any missed payments that you might have. Have a very clear idea of what you can afford to pay and explain your situation. Be honest, be concise. We all run into problems. For example, I've experienced financial hardship but want to resolve this debt. Can we work out a payment plan? Ask for specific benefits. Request a reduced balance, waive late fees, or removal of negative marks on your credit report as a part of the agreement. Be polite, but be persistent. Get everything in writing. Once you've reached out and reached an agreement, ask for a written confirmation before making any payments. This protects you if the creditor fails to uphold their end of the deal. And if it's not in writing, it was never talked about. Some other quick wins is just paying off those small balances first. Clearing out smaller balances entirely can simplify your finances and give your score a small boost by reducing the total number of accounts with balances. Remember, use those windfalls very wisely. Tax refunds, bonuses, finding $100 on the floor, or any kind of unexpected income. It can go a long way in paying down the balances quickly and improving that credit utilization. Sign up for Experian Boost. This is a free tool and it lets you add on-time payments for utilities, phone bills, and even streaming services to your credit report, which can give your score an instant boost as well. Final note on those quick fixes: while these tips can help you see faster results, remember, long-term success comes from consistent, responsible credit habits. Use these strategies as accelerators, not shortcuts. You'll be well on your way to achieving your financial goals. With all these steps in place, you now have a solid game plan for fixing your credit score. Whether you're starting from scratch or you just need a boost, your efforts today will create lasting opportunities for tomorrow. Thank you very much for watching. If you found this video helpful, please consider hitting that like button, subscribe for more tips on finance, business, and real estate. Let's build your financial future together. So there you have it, ways to improve and transform your credit score. Each step is like laying a brick in the foundation of your financial future. It's not always easy and sometimes it might feel overwhelming, but with focus and dedication, the results are truly life-changing. Improving your credit isn't just about numbers on a screen, it's about opening doors. It's about qualifying for that dream home, securing a lower interest rate, or even just feeling confident and in control of your financial destiny. Remember, your credit score is more than just a number. It's a very, very powerful tool. It can help you buy businesses down the road, buy that dream home and really enjoy yourself, get that car and not have to overpay for everything. Your credit score is so important and it is really that foundational piece to financial success down the road, which is why today's video is dedicated to increasing your credit score, building credit, fixing your bad credit if you have bad credit. But we're doing this as the very second video I've ever posted because it's that critical to building that foundational piece before we can continue progressing forward and really learning how we can be rich and self-sufficient and just enjoy our lives the way we're supposed to and not having to worry about money day in and day out. I really hope you liked the content today. I hope you will consider subscribing. I'm excited to push out more content for each of you. Please let me know in the comment section if there's any topics that you really truly want me to cover, and I will be happy to look into it and do the best I can. I want to provide you the most value, the most detail that I possibly can. These videos take me a little longer than I expected it to be honest with you, but I'm enjoying every minute of it because I get to teach you what others have taught me as well. So thank you very much for all your time. I hope to see you back on this channel. Thank you.